Hi, this is Rob Warlow and welcome to my Friday Business Finance Bulletin, a weekly roundup of tips, news, ideas and strategies on raising finance and dealing with banks. As you can see, totally on location this week. We've been spending today at a Commercial Finance Expo hosted by the National Association of Commercial Finance Brokers. Whilst we were here, me and the team, we decided let's grab some interview time with some of the key alternative lenders that we use and that you can use in order to raise finance for your business. So, been out and about with the camera today, so let's go to a few clips with tips and ideas on what is out there on the marketplace from some of those lenders.
So Funding Night provides unsecured finance to small companies. They're generally owner-managed businesses, and what we're looking for is companies that are growing, that are building something and are responsibly managed. So one of the things we're clearly looking for is decent quality of financial information, because the historical information simply doesn't give a picture of how a business is going. So we're asking for some track record, like 2 years. We're asking for one set of filed accounts, but we also want to see management accounts which are reasonably current, so within 3 months of the application, including a balance sheet. And the other aspect is of course a cash flow plan. So there is a cash flow for the next 12 months, which shows that a business is actually giving thought to how lenders and suppliers of finance are actually going to get repaid. And we think that's critical for being able to evaluate a business. But what we focus on overall is the owner of the business and how they have conducted themselves. If you go through people's past history, very often businesses make mistakes. A businessman will have a failure, maybe in his past. How's he dealt with it? Has he, for example, if he's had something going into liquidation, how's he dealt with the creditors? If he's actually managed to pay off all the creditors through some scheme of arrangement, that's the sort of person who we'd like to back, because they really honour those sort of relationships. Yeah. We think that's really important.
Just to give you an insight on what Lancashire do, we do anything from commercial term mortgages, bridging loans, auction finance and development finance as well. Typical client that would come to us would be someone that's got a checkered status profile, or any type of security that we can consider. So your residential investment type of security to licensed premises, pubs, clubs, working clubs, hotels, restaurants, land with or without planning permission, farms, equestrian, so quite a variance that we can look at there. We can look at the complexities of a client's income, so where a client hasn't got 3 years trading books, we can look at that from a pragmatic perspective as well. That just gives you a reason why people will come to us in that instance.
My name's Kevin Peake and I represent PensionLedFunding.com, and PensionLedFunding is a relatively unique type of funding for small businesses. What's unique about it is you can use your pension, an existing director's pension, to fund your business. You have to pay the money back, and you have to pay back at a commercial interest rate, but the interest is actually going back into your pension, so it's growing your pension. And one of the things we say to clients is, would you invest in your own business? Because if you would, why don't you invest your own pension instead of in other people's companies through Aviva or Scottish Widows? Invest that money into your company, and because it's your pension, you can decide what the use is. So you might want to use it for staff, machinery, commercial property, and of course the great thing is, because it's your pension, you never have the worry of personal guarantees or the bank pulling the plug on yourself. It's pretty rare that you're going to wake up one morning and go, I'm going to pull the plug on my business, because you are the owner of that money. So it's very powerful, and it works for lots of things. It works very well in service sector, and it works very well in manufacturing. So nearly every sector, including franchising, it's a very powerful tool for it. It's not right for everybody, and we do a thorough process to make sure that your pension will be protected, but the real benefit of it is that it's putting you in control of your business, your funding, using an asset that you've already created that you thought you couldn't touch.
Yeah, so Pay4 is a working capital solution for SMEs. It is in effect a payment system which gives clients a revolving credit facility of between 100,000 and £1 million. The finance is not asset-backed and is not secured, it is insurance-backed. And so it can be complementary to any existing finance in place, such as bank finance or invoice discounting. The way it's presented to the customer is through an online payment system. So our customer would upload an invoice onto our platform, we would pay their supplier, and the client would then repay us with up to 120 days credit. So it's a revolving facility. Once they've repaid us, they can reuse those funds again. And it seems to work in many different sectors. In retail it works well because other finance solutions like invoice discounting don't work, but also where you may have a wholesaler who imports a lot of stock, it works well, and also manufacturing, processing, engineering businesses where quite often they have to pay their suppliers cash up front and their customers pay them on maybe 90 or 120 days credit. So in effect, when they are having to finance the whole supply chain, we can come in and assist them with that.
Good. So Funding Circle has been lending money to SMEs in the UK for the past 3 years, and during that time we've traditionally only lent to trading businesses, but a lot of our customers have come to us and said we need property finance, which we haven't been able to offer up until now. As of January we've launched our property finance proposition, and that's basically across 3 sets, so development finance, investment finance and commercial mortgages. We're up and running in all 3 of those areas, and so far in the past 3 months we've lent about £5 million out already, and we've got a healthy pipeline of £20 million. So there's definitely no shortage of demand for that in the markets, and we think with our proposition we'll be able to satisfy that really quickly. On development finance we'll typically do 70% of the land value, 60% of the loan cost in terms of sizing our funding ratios, and the interest rate we charge to the borrower on that is between 7 and 9% depending on the deal. Similarly for investments and commercial mortgages, the interest rates will be between 6 and 9%, and we can go up to 80% loan to value on those deals.
So there we are. I hope you got some good ideas of what these alternative lenders are up to. So I hope you enjoyed the video. As always, if you did like it, please like it and share it on your social media or share it amongst your colleagues. So that's it for this week. I look forward to being with you again next Friday afternoon, sharing some more tips and ideas. And in the meantime, time to go home now, catch the car. See you next week. Bye now.